How do farms qualify for sales tax exemption on purchases? Imagine saving money on essential farming supplies every time you buy seeds, fertilizers, or equipment. That's what sales tax exemption can do for farms. But how does a farm qualify for this benefit? The process is based on specific rules set by state laws and tax authorities. First, your farm must be recognized as a qualified agricultural producer. This means you are actively engaged in growing crops, raising livestock, or other farming activities mainly for commercial purposes. Your farm's primary focus should be on agricultural production, not other types of business. Next, you need to apply for an agricultural sales tax exemption certificate through your state's agriculture department or tax office. For example, some states issue a certificate called the Georgia Agricultural Tax Exemption Certificate. This official document proves your farm qualifies for tax-free purchases. Once you have the certificate, you must present it to suppliers when buying items that are directly used in farming. This could include seeds, fertilizers, pesticides from machinery, or fuel used for farming operations. It is important to know what qualifies for exemption. Usually, things like machinery used directly in planting or harvesting, fuel for off-road from vehicles, and supplies for animal husbandry are eligible. Items that are not directly used in farming, such as clothing, food for human consumption, or buildings like barns and greenhouses that are considered real property, generally do not qualify. Maintaining proper records is essential. Farms should keep track of all purchases made with the exemption certificate and ensure the items are used solely for agricultural purposes. Misusing the exemption or buying for non-farming reasons can lead to penalties or losing the exemption altogether. The exemption certificate often has a validity period, such as 3 years in some states, so farms need to renew it before it expires. Understanding these rules can help farm owners and investors reduce operational costs and improve profitability. When evaluating farmland investments, knowing how to qualify for sales tax exemptions can be a smart financial move. Always check your state's specific requirements and keep detailed records to support your exemption claims. In essence, farms qualify by proving their status as active agricultural producers, applying for the proper exemption certificate, and purchasing only eligible items for farming. This process helps support the agricultural sector by easing the tax burden on essential inputs and equipment.